gentlemen, those were the headlines, and let's now take a look at this news that's coming in from Meesho. Meesho's 5,400 crore IPO opens mostly through a fresh raise. Financials at the company show strong top-line growth but continued losses for the company as well, even though Meesho carries zero debt and a rapidly expanding user base. With India's e-commerce market all set to grow rather double by FY30, the management believes that the opportunity is humongous. It's large, but the bigger question is, should you be subscribing to the IPO or avoiding? Is this an opportunity? And what are the kind of risks that you must keep in mind? My colleague Snehi Shah is telling us the top 10 things to watch out for.
Well, yes, thanks for that. If you take a look at Meesho's IPO that is currently underway and open for subscription, here are 10 important things you need to know before you subscribe to the IPO. We'll be talking about what the company does, the details of the IPO, what the funds are going to be used for, the financials of the company, but most importantly, how Meesho makes its money to begin with. So first, let's start by talking about what the IPO is and what the company is. It runs a multi-sided marketplace connecting consumers, sellers, logistic partners and creators. It is India's largest e-commerce companies in terms of users and the orders that are placed. Some products that they put on the platform and sell on the platform are apparel, footwear, accessories, kids products, baby products, BPC and home and kitchen furnishings. Let's understand how Meesho makes its money. Meesho does not charge sellers commissions and listing fees or consumer any platform fees on their platform. So now the natural question is, how does Meesho make up all that revenue? Meesho earns from logistics, fulfillment, advertising and value-added services, and it follows an asset-light model. So these are two factors that work out in Meesho's favor. Let's talk about a little bit the IPO. The listing date is on 10 December, price band between 105 and 111 rupees per share, lot size of 135 shares. Total IPO size is 5,421 crore rupees, out of which the fresh issue is 4,250 crores, which makes up about 78.5% of the total IPO size, and the OFS component here is 1,171 crore rupees, which makes up 21.5% of the total IPO size. Number 5, let's understand the objects of the issue. First of all, they want to invest in the cloud infrastructure for their subsidiary MTPL, and this is going to be to the tune of about 1,400 crore rupees. MTPL expenditure and marketing and its brand initiatives will take another 1,020 crore rupees away from the pie, and payment of salaries of the existing and replacement hires. Now, this is something that we don't very regularly or very often see in IPO statement of purpose, that you have 480 crores that they are allocating or earmarking only for salary repayment. So that could be a point of concern over. And of course, they want to fund inorganic growth via acquisitions and other mergers, and other corporate purposes, so 1,360 crore rupees for that. Let's talk about the anchor book. We've got the details just this morning. They've allocated 2,439 crore rupees to more than 60 anchor investors. Globally, it's GIC, Fidelity and BlackRock, and domestic, we understand it's SBI Mutual Fund, Axis Mutual Fund, Birla Mutual Fund and Goldman Sachs Asset Management that has participated in the anchor book. Now let's talk about the financials of the company. Top line is growing consistently. On the other side, their bottom line continues to be under pressure, and in fact, if you take a look at the year ending 31st March 2025, their losses were to the tune of 3,942 crore rupees. Yes, that reduced significantly to 700 crore rupees by 30 September 2025, but that is still a very big loss amount to be having on your books. The good thing is that the company has zero debt, no debt at all. Let's talk about scale and operating leverage now of Meesho. Annual transacting users is on a steady upward trend, so that looks good. Their AOV, which is their average order value, is on a falling trend due to fall in seller cost. Remember, they are a very seller-first company and they care more about consumer experience. That is where their focus is, but that is not aiding very well for their AOV. Now, despite this, orders placed continue to remain strong. They are on an upward trajectory, and revenue per order is on the flip side stagnant or keeps falling. So equal number of positives and negatives if you take a look at their operational efficiency. Let's take a look at what the opportunity is for Meesho in India. India's e-commerce market is expected to grow to 15 to 18 trillion by FY30. So that is a big market that they are going to be a big player in. And lastly, let's talk about the key risks, the most important factors that you need to be keeping in mind before you hit the subscribe button for the Meesho IPO. Profitability, it remains unproven despite operating efficiencies that we've seen. We don't know what the path to profitability still is. Their average order value is on a declining trend. Revenue per order that they charge to sellers is absolutely stagnant. high competition from large players could put pressure on margins. AOVs are already under pressure. And remember, these are low ticket categories, so that could impact Meesho more. And lastly, quality control could become complex because remember, their seller base is very, very large. So product control, quality control could be a concern. But that in a nutshell, or maybe more than in a nutshell, is all the key negatives and positives that you need to be watching out for the Meesho IPO before you go ahead and subscribe.
All right, thank you very much, Snehi, for getting us all of those details related to the Meesho IPO. Of course, there are some considerations which investors will have to keep in mind while investing in this upcoming IPO. Definitely, Meesho's top line is growing. User growth is solid despite falling AOVs. And ladies and gentlemen, we also got in touch with Vidit, Aatrey, the CMD and CEO, and Dhiresh Bansal, the CFO of Meesho, to understand more about the upcoming IPO and, of course, the company's outlook and the company's plans as far as growth of the company is concerned, and how the company is going to be looking at utilizing this particular fundraise that will come up with this IPO.
I think our anchor list came out yesterday, and you will see very, very strong names in India as well as outside of India. We have a very good representation of investors outside of India as well, about 60 anchor investors, very high quality names. A lot of these people have seen like exposure to large value commerce companies in other emerging markets like China, Southeast Asia, South America, and they really believe in the story. I think the thing that has resonated with all our anchor investors, I think primarily is that we are still a very fast growing e-commerce company with market leadership today in customers and volumes. If you look at the first half of this year, our orders grew by about 53%, NMV by about 44%, and this is on large basis. Right, like our annual transacting user base is about 23 crores, 230 crore orders annually. So people are very, very bullish and optimistic about the growth prospects of the company. And they also like the capital light and asset light nature of the business. For the last 2 financial years, we have been free cash flow positive, generated about 1,000 crores in free cash flow. So they know that we can keep compounding this at a very good rate while generating cash. So it's a very differentiated story. And that's why we have seen very, very good reception from investors, not just in India, but outside of India as well.
Right. Dhiresh, hi, congratulations. I guess, Dhiresh, soon you're going to be a listed entity and it's going to be all about numbers, right? So your revenue per order, that's been falling over the years. What levers do you have to improve monetization without sort of hurting seller or consumer experience?
Yeah, so the way we kind of think about our revenue, it's in 2 streams. There is what we charge for order fulfillment related to our logistics, where we kind of make money on a per order basis. There is also advertisements, wherein sellers pay in the form of ads on the platform to get their listings promoted in the overall feed on how they are kind of appearing. So these 2 streams are kind of separate in nature. On the logistics side, the principle with which we have been operating is we make a certain margin there, and we have been kind of improving our cost efficiencies quite significantly. If you look at between FY23 and FY25, our cost of logistics came down by about 20%. And some of this we kind of passed into our bottom line in the form of increasing contribution margin. Some of it we kind of passed back to our sellers and consumers in the form of lower pricing for logistics. And that has led to significant expansion, both in terms of the frequency of our users, as well as new users getting attracted to the platform and joining the platform. So that's been the growth formula on the logistics side. I think going forward as well, we will keep focusing on these 2 revenue streams, apart from unlocking some of the new ones that we have on the anvil. And ad revenue, especially if you look at it, we are today roughly 1/3 in terms of ad revenues as a percentage of NMV when you compare with global benchmarks. And typically this growth is non-linear in nature. As your platform grows, you have more sellers doing ads. The ad revenues also grow faster than the NMV percentage growth itself. So those will be the 2 levers with which we will grow our monetization going forward as well.
Right. Vidit, come in here, because despite strong growth in users and orders, losses still continue for you. What is the roadmap to profitability, and by when is it that you expect to break even on EBITDA?
So again, we can't share forecast here at this particular stage. But if you see, at the end of the day, what matters for a company is free cash flow, because any company is valued at the net present value of all its future cash flows in a company. And that's actually the metric that as a company we optimize. All of our internal capital allocation, all investments are optimized for long-term free cash flow because we believe that's the right thing for all our shareholders. And for the last 2 years, as I was mentioning earlier, we have been positive on free cash flow. Last year, this number was about 1,000 crores. And even in the future, this is the core metric in the bottom line side that we will keep optimizing for. Of course, as the business keeps expanding, there is more operating leverage. Some of the revenue streams that Dhiresh talked about, they keep growing in a non-linear fashion. Like all other bottom line accounting metrics will also improve. But I just want to emphasize that the thing that we believe is most important, and which is why we have designed a business model like that. As I said, there are actually no other e-commerce business model in India that is as asset light and capital light like us. So I think we have been very conscious about like investing money the right way and optimizing for the right long-term value for our shareholders.
So Vidit, okay, let me put this question differently. Therefore, logistics was one lever you've used over the last couple of years. But what are the other levers that are available to you to get to EBITDA break even, to get to profitability?
Yes, so today, like the two scaled up levers, as you said, are logistics and advertising. And as Dhiresh mentioned, just in these two levers, there's a lot of potential of growth, right? Like as we keep expanding, logistics is in a volume business, very high operating leverage. Once you have the highest volumes, your cost comes down quite a lot. At this point in time, instead of maximizing profitability, you will see for the last few years, we have been like passing back a lot of this value back to the customer so that the platform keeps growing at a fast pace, more consumers come on board. So I think that's what I mean. But if we have the lever to kind of keep expanding that margin if we want. Advertising, same thing. The more competition you have among sellers, higher the chances that people will spend on advertising to gain visibility. Apart from this, by the way, we are also investing in some of the newer businesses that could become like large revenue streams in the future. Like we are investing in a financial services platform so that our sellers and consumers can get access to products that are otherwise not available to them. If you see some of the largest value commerce companies globally, they have built like financial services businesses that are quite large in those markets and contribute significantly to the bottom line of those businesses. So that's one optionality we have. The second optionality we have is as a content commerce business keeps growing, we have an opportunity to make some margin there. At this stage, the business is still too nascent, growing very fast. So we are investing more in growth, but that option is always there. So I would say like in terms of levers, we have enough levers, but I think it's a very conscious choice of like focusing on long-term value creation for everyone rather than optimizing for profitability in the short term, because we believe that's the right thing for everyone.
All right, so that's Meesho's leadership speaking about how the company is looking at minimizing losses and, of course, about the path to profitability, how that will be achieved. But ladies and gentlemen, it's now time for us to slip into a very short commercial break. Lots more coming up on the other side. You don't go anywhere.